Coinbase has won the crypto arms race. Yes, folks, in a time when Bitcoin is appreciating every other month and competitors in the space are going under and facing billions of dollars in lawsuits, Coinbase, one of the most hated exchanges, at least in North America, is coming out on top to become the number one choice for institutional and retail investors at a time of insane volatility. Coinbase stock is now up more than 240% year to date, beating basically the returns of any other large cap tech stock. And it's really funny because this outperformance has been completely glossed over by mainstream media. Instead, what media outlets want to focus on is exactly what's going wrong in the crypto space at any given point in time, namely over the past few weeks with what's been going on with Binance and its CEO. And although, yes, it's never good to see industry players struggle like we've seen with FTX, Kraken, and now Binance, it is an important indicator of why it is advantageous to be a publicly listed company in the United States. And that advantage, folks, is exactly what I want to go over in this video. But as usual, folks, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. To start things off, folks, let's address the elephant in the room, which is the billion-dollar lawsuit against Binance that was revealed just last week. For those that don't know, Binance was essentially the number one highest trading volume crypto exchange globally. And it, as a matter of fact, still is, with 24-hour trading volume almost at $10 billion, with the company leading volumes at least outside North America. But well, as it turns out, folks, that lead came with a significant sacrifice on the company's part. Because since 2019, the company has launched a branch specifically for the United States called Binance US. But as it turns out, because regulations in North America are much stricter than any offshore markets, the company was breaking quite a number of laws related to money laundering and US sanctions. And well, folks, what happens when you chase volume, tokens, and scale, with Binance having grew to a record amount of trading volume in a very short amount of time, is the risk of potential misuse by customers. Although Binance is not committing the type of fraud that FTX did, where essentially customer assets were funded by a hedge fund with intertwined balance sheets that resulted in basically no liquidity for the end user, Binance is still in hot water because, as it turns out, at least in the United States, they were operating still as an unregulated broker agency. Binance is now essentially being held accountable for potentially processing transactions associated with terrorist groups like Hamas, Islamic Jihad, Al-Qaeda, and even ISIS, resulting in a multi-billion-dollar fine against the company and a CEO that is now stepping down. Now, for those that are unfamiliar, this investigation has, unlike with Coinbase's situation, been going on for many years now. Since the crypto exchange launched its US branch in 2019, regulators have been very adamant at making sure they fine print any sort of potential irregularities within the company's operations, which obviously are hard to track because the company is completely private and based offshore. And although Binance can still operate in the US, although now with more stringent regulation and a new compliance officer, this is exactly what has put Coinbase in the position of power that it is in today, and something that, in my opinion, was inevitable from the very start. With a return of more than 280% year to date, it's important to remember that Coinbase initially went public on the Nasdaq at a share price of $250 without dilution back in April of 2021. And since then, the stock has had a wild ride because obviously the company went public at a time when inflation was very high and at the exact wrong time for the crypto space, which saw its peak just 5 months later. But now that Bitcoin is starting to recover going into the halving year of 2024, and when peak capitulation has already exited the minds of most investors, the opportunity in Coinbase is exactly what investors in this space should be looking out for. Because with Bitcoin being down roughly 72% from its peak to its trough, Coinbase was down significantly more, almost 90% from its IPO high. That makes the company essentially a derivative of what's going on in the crypto space, and because the price of crypto markets has recovered significantly, it was much expected that a similar rise could be happening in Coinbase's valuation. And additionally, what many people forget is that unlike companies like MicroStrategy, which simply own Bitcoin on their balance sheet, Coinbase not only owns some Bitcoin and has stakes in different stablecoins like USDC, but they're an actual infrastructure provider, resulting them in potential benefiting from different new developments. And well, folks, the biggest one of those developments could potentially be the approval of a spot Bitcoin ETF, whose odds of turning into reality have increased to almost 90%, according to most Bloomberg analysts, over the next 1.5 months. As a matter of fact, folks, the official spot ETF approval window has been extended from January 2nd to January 10th, according to many analysts that are working closely with the SEC as well as independent consultants. This information, paired with the fact that we are just at the beginning of the Bitcoin price cycle, regardless of how far we've come so far, is setting up for a really exciting next few years in the crypto space. As you can see, folks, the line in green shows you what you need to know so far, and every other line shows what's happened in the past. Although history does not repeat itself, it does rhyme, and as Bitcoin continues to grow, the odds of this playing out at a less volatile level is increasing every year. And with a company that is now becoming the leader in this space, trading at a valuation of only 7 to free cash flow, with profit margins that have been improving every single quarter since the start of 2022, is making for a really exciting investment opportunity and potential trade going into 2024. Now, as usual, folks, let me know your thoughts on the situation down in the comment section below. Things can obviously change, so make sure to do your own research before you buy or sell anything. But as usual, thank you very much for watching, and I'll catch you guys in the next one. Take care.